All right, so here we go. We are at the charts and we're looking at the Aussie Swiss franc. Um, we're going to look at a couple things here. I want to just show you, but first of all, I have the OBV on my chart and then I have the ultimate oscillator on my chart. Reason I have them both on my chart at this time, I'm getting ready to take one of them off, is because basically when we had our session in our webinar session, a member asked me which indicator is best to use for the divergence. Was it the ultimate oscillator or was it the OBV? So I told him that I believe the best one to use was the bottom one, which is the ultimate oscillator. Okay, so and I do believe that still, but I'm going to switch and just leave the OBV on here. Now the OBV is very good. It catches most of the divergences just like ultimate oscillator, but you could see back here. All right, so let's mark this. You could see a divergence starting back here, and this was starting to go to the downside. Well, this divergence didn't start yet. It didn't start till here, but it went really strong, okay? So we're looking at a trading opportunity based on a support and resistance and divergence. Now, what we want to look at here is, let's go to, let's stay here first. Looking at this here, you can see we're inside this box, which means we're ranging, right? So you can see with Ichimoku, everything is flat. Now this is a range, but I don't want to trade the daily candles because look how big they are. All right, and you might not catch much of the trade, you know, because our candle, suppose our candle closes down here as this one did. We're halfway in the zone, in the range already. So also Ichimoku is not helping us at all. All right, so when we go to the 4-hour time frame, we want to go down to that 4-hour time frame, and let's get rid of one of these. Let's get rid of one of these indicators. So you could see they both show pretty much the same divergence here, and I'm going to get rid of the ultimate oscillator. All right, so we'll let that one go. Let's remove it, and then we'll just use the OBV for now. So what we're looking at on the 4-hour time frame now is price has run into this resistance level here. Now I'm going to get rid of Ichimoku. I'm going to hide it because it doesn't help us at all. So it'll probably just be in the way. You can't see the price. So when we look at the chart here, guys, trading these levels, a lot of times I like to just trade resistance. I don't like to trade long because I don't like trade breakouts, okay? Because a lot of times breakouts get trapped, and then you can see the bottom breakout here. The bottom support level here. So I'm going to show you what happens at these support and resistance levels, and basically these are bear traps and bull traps. So first of all, you had a bull trap here because all traders that are looking for this breakout level, for the market to break this level, soon as they saw this market moving and before the candle ever closed, I'm sure a bunch of traders just jumped on the boat here. All right, and when they jumped on the boat here, the market shot back down and then closed lower, and then the next candle went even lower. All right, so that wasn't a classic bull trap, but that's a bull trap because you're getting trapped. Bulls are getting trapped long and the market's going back to the downside. That's because at resistance you should probably more than likely trade short. You should follow that. And then at support here you should basically trade long. Now there was a major rejection here that would have helped you to trade this support level, and then you had a second level. But breakout traders would have jumped on here and then they would have been caught in a bear trap because the bears are looking to go short and they get caught in this trap and then they're not able to get out, and then they lose their trade. But if you wait for this candles to close pretty much at support levels, you could see that you had a big rejection here and then another one. And then at rejections, you probably want to be trading at rejection to the upside and you would have made some profit. Then you could see here, we attacked this level twice. This is what I don't like, coming back to that level twice, because eventually we're going to break out of this level. We're going to break this. So how often can we catch this trade on support and resistance? All right, because yes, eventually we are going to break the level. But what I'm going to look for is at this point I'm going to still do what support told me and what resistance told me prior. So the resistance level prior was being violated. It was not violated. So I'm not going to look for it to be violated at this point. So therefore I'm also showing a divergence, okay? So I'm showing a bearish divergence in this 4-hour time frame. So if we look at that, let me mark that divergence. You could see this level here, which would be pretty much right here. All right, so pretty much right on down here. And you might think I'm drunk because I can't draw straight, but nope, I am not drunk. And then we go to this level. Even if we look at this whole level, this whole area, because it's bouncing on this level, that's what's kind of scaring me, that it's bouncing up there so often. And you could see that's right at where we are now, so it would pretty much be this. And you could even see there's a small divergence here. There's a bearish divergence here, which we're kind of thinking if we have these divergences, we're looking for the market to drop. Now, trading the range, you quite naturally want to trade from the resistance back down to the support level. But if we take the trade, doesn't mean it's going to go that far. So I like to shoot for levels at least, and then try to see if the market can make those levels. So one of the levels that I'm going to look at getting in, I'm going to see if the market could come back to this level first. And if the market could break this level, then I'm going to see if I can make it to this level. All right, but I'm going to trade based off of watching the price action to see if it breaks and if it can break through this level and then go to the next level. So we'll close this out, and then we'll look at where our entry could be. So we have a nice indecision candle, right? So with that indecision, we want to trade this indecision. So we're going to trade at this level. Now, a lot of times we're going to trade aggressive because there's two types of trading at these levels that we look at. One of them is aggressive and one is conservative. So with aggressive, we'll trade the level, all right, with a stop loss a little above that rejection, this indecision candle. So we're going to trade the indecision low level just a little bit below it, be a couple pips lower, and then we're going to use the indecision high as our stop loss, be a couple pips above it. A lot of times the market likes to come right back down to this level and then don't break it. So if the market decides to go higher, we shouldn't get triggered and we shouldn't lose the trade. And then we can start looking at a different type of trade, because we'll look at a different trade setup that will probably take effect after that. But if the market decides to come to this level and break, and we're now, this, as I was saying, we're looking at aggressive and conservative style. So the aggressive style would trade this level. So as soon as the market drops and comes down, trigger right at that level. And then the next way would be to be conservative and wait for this candle to close. Maybe it closes down here, and then you take the trade. Well, what that does, it increases your risk. All right, because you have to risk more now. Your bigger stop loss. All right, so that increases your risk. So therefore, sometimes it's better to trade aggressive, depending on what kind of setup we have. All right, and especially on rejections, I really like to trade. Aggressive on a rejection level. Now this is more of an indecision, but you have like a rejection tail up here. All right, but this is the level where we want to be getting into the market. All right, so a little bit below this point, which is the low here, is 0.75478. So you want to be a little bit lower than that. Okay, so that's the trade setup. If this takes effect, triggers you, then start looking to take, if the market could get down to this level. If we can continue going down, then we're going to shoot for the support level here. All right, so that's the trade with the Aussie Swiss franc. Hopefully that helped you guys out. Yep, that's it. So basically, also guys, I just want you to know about my membership. Like I mentioned earlier, it's a 1-year membership, and you get involved. You get the courses with it. You get all the courses. I got a new stock course coming out soon. It's going to be awesome. It's a really good stock course. Had a lot of help with people putting that together. Got your Ichimoku courses. Got 2 Ichimoku courses. Got some other courses coming out. Have webinars daily, pretty much. Have forum members chat room, and then our trade alerts. So if you got a trade alert, it would be much like this. I would send you out a video, and I would send out a link to the video, and then you guys can look at the video and decide if you want to trade this trade setup. I like to call these trade alerts. I mean trade setups, not trade alerts, because on a trade setup, you know the setup, because I taught you the setup. We learned it setup in the classes and in the courses. So the setups, you'll know it. And then when I show you the market, you'll be like, oh, I see that. Boom, I'm taking that trade. So that's why I like to call it trade setups, because I'm not just telling you, hey, there's a trade here and you could take it at this level and do this. Basically, you know why to take that trade because it's a setup. And that's from learning in the courses and in the classes. So hope to see you become a member, and I'm sure you'll enjoy it, and I'll be right there to help you out all the time. So until next time, guys, have a great one. God bless. So long.